It's a pleasure to have you this evening on this edition of this week's The Link. We continue to give you information that links you to opportunities, changing decisions, and so on in your business. And you must have heard the big commercial banks especially are now aggressively calling on you to come and have credit with them. However, we are going to look at the things you must know before you jump in. And tonight my guest is Mr. Guy Lutaaya, who is Director Credit in ABSA. Mr. Lutaaya, welcome.
Thanks, Samuel. Thanks for having me.
I almost said Guy, and you know. Okay, let's start with this. Do banks really believe that people need money with this COVID situation? I mean, things were a bit slow. So all of a sudden, you guys think we need money?
Yeah, thanks, Sam, for that question. I think, coming from the year that we've had, from 2020, when the pandemic started, we are now seeing some recovery coming through the economy. And, as the economy recovers, I do believe banks have a duty to play in the economic recovery by aiding, stimulus through availing private sector credit. Okay. And I think that's why you're seeing many banks, including the one I work for, ABSA, they are now on a drive, I wouldn't say aggressive, but a drive which is targeted to some businesses to help them get back on their feet.
Okay.
Yes.
I know some people think this whole discussion of economy recovery. When you say recovery, somebody's sitting there saying, what is recovery? What do you see that you may say businesses seem to be coming alive? Okay.
And Sam, that's a good question. So I think, let me just give like two examples that I see where I'm seated. Yeah. So for example, we do have customers or clients, before COVID that had expansion plans, as an example. We do have, for example, a manufacturing client. They had gotten an order to increase their offtake to supply paper bags, but they had to put that on hold because of COVID. Okay. So now that the economy is starting to pick up, they have come to us, to actually fund, for example, equipment that they need in order to produce the quantities in large, the large stock. So I think that's one. The other example is around diversification. So again, we do see clients that had put their diversification plans on hold. As an example, we do have a large pharmacy. They wanted to go out into home care and delivery, right? And they couldn't do it then because of COVID. But now that the economy starts, looking up, they are in consultation with us to kind of fund, for example, the motorbikes that they will use in the deliveries and also the technology that will aid in such.
That makes sense. It's evidence-based. So viewers, people are starting to buy and demand, as Mr. Lutaaya has indicated here. Let's move to the second question. Coming out of the COVID-affected economy, ABSA is calling me to come for money. What should I think about before I say, okay, let me just go and enter the bank?
So Samuel, I think a couple of things. So I think the one thing is, you have to think through thoroughly, of your plan and ambitions before you come to the bank. Okay. Why do I say that? It's because banks, more than ever, they are really scrutinizing credit applications given the environment we are in. And I think it's, it's basically justified, right? So as a business, before you come to the bank, please have your plans ready. The bank is obviously going to interrogate your financial health in terms of your projections, what assumptions have you used, and then obviously, what is the future state of the business. So I think that's where all lenders are interested. Yes, COVID has happened. There have been some, maybe short-term issues that have affected cash flow, liquidity, but in terms of going forward, how does your business look, and can you defend your business plan to make sure that your business is just going to take off on the positive trajectory. So I think that's number one. The other thing is most of the businesses have suffered during COVID. Absolutely. Right? So some have actually even been under the credit relief measures that BOU instituted at the beginning.
Restructuring loans and stuff like that.
Exactly. So when you basically come to the bank, you need to actually evidence to the bank, how resilient your business was, you know, the issues that you faced, how you mitigated them, and, you know, how does your business look after recovery, right? Because that is going to be very key in a bank deciding on whether to advance you money. So I advise all the businesses to basically package their stories in such a way that they look at not just now, but in terms of the future state of where their business is going as the economy recovers.
Meaning, Mr. Lutaaya, that I may not get the money necessarily when I enter the bank. What are my expectations? Depending.
Yeah, so I think the expectation is, and somewhere I use this word, you know, quite, you know, because we expect your business to be fairly having been resilient, right? I'm using fairly because, you know, not all businesses went through the pandemic unscathed.
Absolutely.
Right? So definitely, you know, in terms of, you know, as banks, we do fund solvent businesses, right? Businesses that basically have, you know, positive cash flows and all things like that.
Yeah.
So when you come in, I think the idea is for you to show us how your business is tracking. Yes, now there might have been issues, but in terms of going forward, does your business look like a viable business that we can bank? So you need to actually come ready to be able to tell us that story. And, you know, we definitely take, you know, heed and, you know, look at that, and we consider that. I think, Samuel, the other thing which I wanted to point out to the viewers,
Absolutely,
in terms of, you know, just to understand. So I think gone are the days where we used to do like traditional lending, right? You know, especially at ABSA, and I know many other banks have these solutions.
Yeah.
As an example, if you're a supplier or a distributor, you know, you can't come to the bank and not necessarily give us collateral, but what we shall do, we shall structure a transaction, you know, between, you know, you, the business, the anchor tenant, and the bank, such that the cash flows that come from the proceeds that are paid are actually used to, or are used as security and used to repay the loan.
It doesn't, the physical money doesn't need to be there,
Exactly.
but as long as it is flowing, that flow there.
The flow is what, you know, what we call a closed loop, you know, deal.
Yeah.
And Samuel, let me just give a practical example.
Go ahead.
So, you know, you do have a transport and logistics business, right? And you do have contracts maybe from Coca-Cola, Hima Cement, Uganda breweries to transport their stock to their distributors, right? So, you know, when you come to a bank like us, we do enter into what we call a tripartite agreement between the three parties, such that, you know, when you get paid by, let's say, Coca-Cola, your payment comes through ABSA as a bank, and that's what we use to actually, you know, offset what we've lent you to be able to perform on that contract.
Okay.
So I'm advising, you know, businesses as well to look at what we call non-traditional forms of lending, which are actually available at the banks.
Absolutely, and that, and there, I know there is depth and height to the non-traditional. They are there, but that will be a discussion for another day.
Yeah.
Who particularly might require money? People are there. Some people like having money. I have the collateral. I'm just going to go to ABSA and get the money. Who really might need the money?
So Samuel, and that's a very good question, because in this environment, that is a pertinent question to ask. So I think I'll just attempt to answer that in terms of what we are seeing in sectors, you know, and I think ABSA and other banks are seeing. What we've started to see when the economy is picking up, there are some sectors that are really, really doing well. As an example, agriculture. Agriculture secondary. We are seeing a lot of commodity traders who export, you know, produce like, you know, coffee, tea, you know, cocoa, you know, come to us, you know, because there's been a really, you know, upsurge in demand, you know, from the export markets of Italy, Europe, and Asia, right? So we've actually seen, you know, those actually coming, you know, for us to get money to actually aid their business. If you go to agriculture primary, so these are organized smallholder farmers that sell their produce to the aggregators that sell to the commodity traders. We've also seen those groups actually, you know, come for money. And I think for Uganda particularly, last year, we had really good weather that helped in terms of, you know, increasing, you know, production. So, you know, we do actually have the stock, you know, for export, and we've seen, you know, volumes go up, you know, across the major crops that we deal with.
So we have agriculture.
We have agriculture. So we do also have, construction,
Okay.
right? And Samuel, as banks, we do follow the money, right?
Yeah.
Especially, when we see government borrowing to fund large infrastructure projects, we always follow the money and see where is this money going. Now, most of the contractors that do government contracts will require, for example, an advance payment guarantee,
Yes.
which is usually around 20% of the contract price. They'll require a performance guarantee,
Yes.
right? And those, they come from banks.
The bank, yes.
Because as, if you go according to the PPDA rules, for example, the APG has to come from a bank in Uganda, right? But for a performance guarantee, they can get, let's say, from an insurance company as an alternate.
So if I am playing, I'm looking at those sectors, I'm looking at maybe agriculture and construction, as I heard it from Mr. Lutaaya, that there's activity there. We're running out of time.
Yes.
Final question in 1.5 minutes. Risk factors on the horizon. I'm borrowing, things look okay, I'm resilient. But what may be risk factors on the horizon? Maybe one or two.
Okay. So Simon, and I think in risk, that's what we call tail risk. So right now, I think people, I don't want people to get the idea that we're out of the woods.
Absolutely.
When it comes to the whole impact of COVID, right? So, yes, we've gone through 2020. Q2 was actually our worst, and Q2 I'm meaning March to Jan, where we saw the economy contract by about 6%. Now, we are still reeling from those effects, into 21. So as a business, I'll urge you to look out for the tail risk. Don't really go all out thinking that the worst is over. Make sure that you plan for the worst as well. So when you're putting your management plans in place, make sure you plan for the worst.
Do some breaks, don't...
Exactly. Don't just go all in, thinking that the worst is over. So I think that's the one thing that I'll basically, And then lastly, Samuel, the one and most important for businesses is to make sure that, their CRB record is clean.
Credit Reference Bureau.
Credit Reference Bureau.
You pay back.
Because, all banks, we always go back and basically check and see how the customer is doing. Yes, granted, there have been some challenges, but that's always a reference, so make sure that, you perform and make sure that your performance is also reflected in your credit rating and your financial performance.
Thank you very much, Mr. Guy Lutaaya, for that concise advisory issues on money. So the banks are saying, come, but you've heard. I take away one issue. Come, but in the background, caution is imperative. That was the link, and you can catch up with me on Twitter at SETSAM, at SETT SAM on Twitter. That was the link. Thank you for joining us tonight.